The Q2 2025 BizBuySell Insight Report paints a challenging picture for the business for sale market. Overall transactions fell 4% year-over-year and 1% quarter-over-quarter. The restaurant sector faced even steeper declines, with general business brokers reporting a 16% drop in restaurant sales year-over-year. For general business brokers, these headwinds translated into fewer completed transactions and longer time on market. In sharp contrast, BizBuySell Restaurants delivered a standout performance, posting 15.5% growth in restaurant sales year-over-year, outpacing the industry average by 31.5 percentage points. According to the recently published data, brokers attribute the slowdown to tighter SBA lending rules, combined with tariffs and inflation, which added layers of complexity that slowed deal activity nationwide. Gagnon, CEO of BizBuySell Restaurants, said of the results, "We disagree that tariffs and inflation are continuing to place outsized pressure on restaurant deals. We see tariffs having very little impact and inflationary pressure cooling significantly for food pricing. More importantly, today's sophisticated restaurant buyer is focusing on actual results for the business they are buying more than headlines about perceived impact." The big picture, industry performance versus our results. According to BizBuySell, overall business sales down 4% year-over-year. Restaurant sales down 16%, year-over-year. Manufacturing down 28%. Largest sector decline, retail up 2%, service businesses up 7%. Meanwhile, BizBuySell Restaurants up 15.5% in closed transactions during the same period. This means that while general business brokers saw deal activity decline and restaurant specialists slowed down, BizBuySell Restaurants surged ahead. Why the national market stumbled? BizBuySell cited several issues contributing to the Q2 decline. Factors not consistent with our results. Tariffs and inflation. Higher costs impacted profitability and valuations. Our view: no more than 20-30% of restaurant food is sourced internationally. Tariffs have minimal impact. Inflation is easing on food costs. Stricter SBA lending. New rules limited seller financing, creating friction in deals. Our view: our brokers were prepared early and worked through the changes. Only one deal fell through, and it was more about seller expectations than the rule itself. Buyer hesitation. 73% of buyers now favor recession-resistant businesses. Our view: everyone eats. A 2024 Touch Bistro report found 42% of consumers dine out at least weekly. They may shift formats, but dining continues. Inventory gap. Fewer listings due to baby boomer hesitancy. Our view: we currently have nearly $550 million in inventory. Baby boomers are actively listing and selling their businesses with us, what the report didn't mention. One critical omission from the BizBuySell report was the growing impact of immigration policy. While some restaurants have faced raids, these cases involved broader illegal activity. More broadly, operators are adapting, integrating tech like AI at drive-thrus to offset labor shortages. Restaurants in the spotlight. Despite a 16% drop in sales, median sale prices rose 3%, and revenue increased %, indicating strong demand. However, median cash flow declined 8%, reflecting tighter margins. At BizBuySell Restaurants, we bucked the trend. Sales prices for our listings were up 4% over last year. Our transactions continued to grow despite the national slowdown. Why BizBuySell Restaurants outperformed. Several strategic differentiators explain our Q2 success. Specialization. We focus exclusively on restaurants. Our brokers are trained to navigate leases, liquor licenses, and franchise transfers with precision. Buyer network. Our national database of pre-qualified buyers helps listings sell faster. Marketing. A powerful multi-channel marketing strategy drives buyer inquiries across digital and social platforms. Financing expertise. We build deals with SBA preferred lenders and creative structures that overcome lending roadblocks. Franchise resale leader. As the top broker for franchise restaurant resales, we understand franchisor requirements and ensure smooth transitions. Valuations backed by data. Our proprietary tools produce real-time, fact-based valuations that are aligned with market expectations. Additional drivers of our growth. Adaptability. We help sellers counter cost pressure through menu engineering and vendor renegotiations, keeping margins healthy. Technology. Our AI tools support smarter marketing and lead scoring, streamlining buyer engagement. Educational content. But from buyer guides to seller ebooks, we empower clients with knowledge to move forward confidently. Local market insight. Regional brokers understand the specific dynamics of their areas and tailor marketing accordingly. The bottom line. While most brokers are struggling with tighter lending and slowing deal flow, We Sell Restaurants is outperforming, driven by a 15.5% rise in transactions, even as restaurant sales dropped 16% industry-wide. Our clients benefit from a system that works, backed by specialized knowledge and national reach. Looking ahead, despite persistent skepticism in the media, economic fundamentals remain strong. Some call this the most hated rally in history, but smart investors know the real story. Here are 10 reasons we remain bullish on the restaurant market for the rest of the year. Stock market portfolios are at record highs, increasing buyer liquidity. Tariffs are yielding trade surplus gains, contrary to negative headlines. Dozens of new trade deals are in negotiation, including one with the EU announced July 26. Trillions in investment capital haven't yet fully impacted economic growth. Over $7 trillion in capital is waiting to be deployed. Inflation is cooling, not rising. Operators are seeing falling prices in core categories. Pro-growth legislation includes deregulation and energy investment. Interest rates remain high but are expected to adjust. Buyers are factoring this in. Consumer confidence peaked in May, and small business optimism remains above average. Real GDP rose 3.0% in Q2, beating expectations of 2.6%. We remain confident. If you're thinking about selling or buying a restaurant, now is the time to partner with the brand that is outperforming the market. Contact a certified restaurant broker today.